Well, the risk dial for the week, no surprise, minus 26. It started minus 20, minus 20, minus 18, minus 20, minus 26. So basically we're going down. There will be bounces naturally, but it's saying risk off for the time being. The weekly, same thing. Thank God we got out last week, and it's bound to go down, a little bit more. I would have thought somewhere eventually to the 2600 area is what I'm guessing, but it's going to take a long time. And this is why it's going to take a long time. We're going to go into spike down into the green areas and then come back and then go again. This is not the technical picture you expect to happen when an imminent collapse is about to take place. I think it's much more likely that we spike well into the green area and then come back out a few days sideways, and then we can go back down. But this is not going to be a one-way market. This is what this is telling you. If we look at the others, you can see this is the kind of stuff that happens. You need time, and this is a couple of weeks, right? So it's just going to take some time for all these to correct. This is XLB materials. There will be oversold bounces, and this is it. XLK is the one that I think is going to come into the green area as well and then bounce. So we are talking a move to about 75ish. So it's still room for it to spike lower, and you will see later in equities what I say about that. XLF, the one I like least, it's gonna take time. It needs time to really start turning bearish and break the 26 level, as I will show you later. Well, we still have our support at times 16, just above 2800. Would love to see a little spike and then a reverse back up, and then do some kind of a head and shoulders kind of thing, and then come down to the 15 times. I would love to see that. I think we might get the spike, as I'm going to show you later in the equities, but I also think that we'd certainly get a reaction off it for a few days at the very, very least, and then we think about it again. My thesis is basically that we are losing faith in Trump and his negotiating abilities, and basically in his stability, in which case you certainly would expect the times 15 Blue Angel to be tested at some stage, but I think it's going to take some more time. In 2-year notes, the picture is pretty clear. We've tried to go up, we failed miserably, only got to the middle Bollinger Band, and now at some stage over the course of next week, if equities are weak, we'll go down to that 144 level and slowly go to the 130, which is the long-term objective that I have. But the 2-year is getting tired, and the Fed can only do so much, and it insists on doing things at their monthly meeting. So the 2-year has a long time to go before the Fed cuts rates, and therefore if you see it anywhere near the 130 level, it's time to take profits and move on. Unfortunately for the 5-year, I'm also going to repeat myself. Nothing new really. You can see what happened last week. We had quite a small range. We are really looking over the course of the next 2 or 3 weeks to touch this 117 yield level, and that will be an area where I very much want to get out of all my my positions. I don't think that we can expect much more than that. It is very likely that we will stall out there, and that is this level around the 120.18 area, 120.20, something like that. It is, 121, let's call it. It's unlikely to do much better than that. And really, I would like to be out of the 5-year as well. And maybe that will actually coincide with the lowest level in equities, which could easily be well below 2800. I'm always very mindful of the fact that we have not traded below 2800 in the SPX while we did in futures, and we probably need to revisit that area and reject it. While tens over the course of the next 3 or 4 weeks are almost bound to touch the 139 level and probably spike through this previous low, right here at 133 and then reverse. That would be what markets do. They take out all the stops below 133 and then reverse, and probably all the way up to 170. So to me, that indicates another couple of weeks of weakness in equities and strength in bond futures before any kind of meaningful reversal takes place. Well, the dollar continues to frustrate. It had every opportunity to go down, and it hasn't. This 111.08 level has held like a Trojan, and now probably will trade all the way up to 112.10 again, basically in a range. But until it starts breaking the 200-day moving average and turning it, I'm quite confident that it'll turn back down. I know all the talk about Trump wanting a lower dollar, but what's he going to do? The American economy is so much stronger than the European economy. There is so much more than the ECB is going to do over the course of the next few weeks rather than the Fed. The Fed keeps on being cautious. Unless the Fed now steps up and starts doing 50 basis points, or the market anticipates that the Fed is going to start doing 50 basis points, we will have reached that target for the spread between Bunds and 10-year notes. And then if we are not higher than this 112 area, the dollar is going to have another period of strength. So I would be patient, and I would still be looking from better levels to reshort the dollar. To reshort the euro and be long of the dollar. The spread between 10-year notes and the Bunds is trucking along nicely. Still see it trading 210. That will be the objective from this move here, a move of equality, and basically that is where I see it stopping for some time. Once it's got there, the dollar has a chance to start strengthening again, I think. So basically another, what is that, 11 basis points or so, which probably takes the dollar up towards the 112, 113 area. And then we have a possibility of more strength from the dollar. I am very impressed with the performance of gold. It keeps on trucking, as it were. It keeps on going up along the Bollinger Band. There is absolutely no reason to short it. The bonds are still in a downtrend. The dollar is not strengthening significantly, therefore not putting huge amounts of pressure onto gold. For the time being, not a lot of reason to short it. When that changes, we will short it. But even if we were to change this now to a daily chart, the pattern doesn't look bad at all. It still says that there is more upside, more possibility of upside. The moving averages are catching up the market nicely. It's consolidating in time as opposed to in price. So a further leg higher, certainly towards this 1560 area plus 1570, I really would consider that to be a strong possibility in the early part of next week. Even the spread to the S&Ps is consolidating in time rather than price. Certainly there is a distinct possibility that we make a new low for the year, and certainly a new low since December, when it completely fell out of bed. That would be quite amazing, because we will have gone back to the levels that basically when Trump took over. This is the when Trump took over and the market, the S&P, started rallying. Well, this will have negated the whole of the Trump presidency, and he will have said that it would have been better to be in gold rather than equities. Something to think about, because that is a bold statement by the market, and something that will have big repercussions at some stage. Yes, CS on a weekly basis has closed below 64. So really I would expect it to touch this moving average next week. That's 28.02 or whatever it is. Possibly spike all the way down to 27.90 and then reverse, and probably trade in a range between this moving average, which is 28.80-ish, all the way down to 27.85. That is the kind of range that I see for next week. It's still not that bearish, because you will see that the DAX is not too bad, the RTY is not that bad. It all depends on the performance of XLF, I think. Only if XLF starts really closing below 26 will we have these spikes of these Bollinger Bands. But certainly the direction of the market is feeling heavy, and once it's spiked there, then we can expect a reaction higher. And on the daily chart you can see the band of resistance that he was unable to close above, which now goes all the way from 28.80 to 29.12. That is the area that it really would need to close above to start getting even remotely bullish. Any sort of bounce up to 28.80, 28.90 I think is going to get sold for a move to test the 200-day moving average, spike these lows, get everybody short, and then probably reverse and come all the way back up to 28.64. I don't see the market falling out of bed yet. What I do see is people slowly deciding that they don't really want to be long at 17 times forward earnings. Even 16, they're gonna nibble, they're gonna think about it. So it all depends if this trade war starts getting worse, and if this president starts continues to act like he did today with those tweets. I think the market is slowly gonna give up confidence in him and reprice the whole of the American equity market to lower multiples. And here on the monthly chart you can actually see how important these levels are, because if I were to enlarge them, you will actually see that we are right on top of the very important moving average to close, 28.35, which funnily enough happens to be the forward earnings Blue Angel. Below that, here we are, 27.87. I think easily we could spike there and come back to 28.64 or something like that. It's gonna take time for people to be persuaded that no, they don't want to own this area. They would much rather own it down here, 26.70, 26.80. That's where we could be in October time. But it's a process. People lose faith in markets and in countries, not all at once. It takes time, and then it happens all at once. I would have thought that we are still in a range. This area is still a buy, 27.90-ish. It should be a decent bounce area to go back up towards 28.64. This is the RUT, which is financials heavy and therefore should lead any move lower. Now you can see how it's opening up the weekly Bollinger Bands, but you know it's closed right below the Bollinger Band. That is why I don't think it can move lower absolutely, but it's going to have a tendency to come back towards the Bollinger Band. And therefore that is why I don't think that the S&Ps are just going to break through the 2800 to 2820 area and not see any other, just keep on going lower. I think there will be reactions simply because the picture in what should be the weakest is not that weak. It needs spurts higher to build and time to build the possibility to make much lower lows. Well, this is XLF, and you can see why I think this level is so important. Every time it breaks that level, it goes down at least a couple of percentage points. From 26 to 25 is actually close to 4, isn't it? So, I that is why I'm worried that we will spike below 2800 next week. Not worried, but looking forward to it, and then come back. It is unlikely to keep on going below the Bollinger Bands unless there is something really, really important going on. We will see. I certainly expect XLF to be the weakest sector because it's the one most affected by the shape of the yield curve. Unless the Fed starts getting very aggressive, XLF will remain weak and drag down RUT and what is now still a very big sector in the S&Ps. So I really can't see the S&Ps rallying substantially unless XLF exhausts itself on the downside and has room to go higher. The final piece of the puzzle, DAX. Well, it's slowly opening up the Bollinger Bands on the weekly basis, isn't it? But it's still, it basically went up this week as I expected it, and then, because of the Trump tweet, back, boom, straight back down. But still closing, on these Bollinger Band, above the Bollinger Band, still these moving averages are still holding it. We have this huge area between 11,350 and 11,430 to support it. Didn't even make an attempt to go down there. So basically closed where it opened the week, i.e. quite a good performance given what the S&Ps did. That is because people are just not selling the DAX. They are selling the thing that they are beginning to lose confidence in, and that is the States. We also have, we are also coming to the end of the European holidays, and we have the ECB very soon. So really, I think, between 11,500 and this 11,800 level, we could trade there for a bit, while, for a change, the DAX can outperform and European markets can outperform the US, and why not? I am not that bearish DAX, and if I'm not that bearish DAX, which should be one of the weakest markets, in that case I can't really see the S&P just busting through the 2800 level and not coming back. Another reason why I don't think that we just cut through the times 16 Blue Angel around the 2820 area without any problem is because I don't see that we are going to go much higher than the 22 to 23 area in volatility. 20 to 22, 23 I think is going to be the range for a bit. Then maybe another dip and then go higher. It just isn't ready, doesn't look ready. I might be wrong, but that is what that's what I truly think. And there is no reason to expect the market to get too anxious ahead of the mid-September Fed activity. Certainly, if we think that they're going to start cutting by decent amounts. So I would have thought that the volatility is going to be contained between a, and call it 19 and 23. That is where I expect it to be next week, and in that case you will see at best a spike of the 2800 level and a return towards 2850, 2860. Onto the biases for next week. I've put all the levels for the 2 years, the 5s and the 10s. 139 to me looks like a cinch that they'll just bust it and then reverse into it, which I hope coincides with the low in the S&Ps. This move is progressing nicely towards the 210, 215 area. I've put down, that 2900, 2920 is the area that it will, I'm pretty sure will not bust on the upside. I think we'll be lucky to see 2880 basically take out a few stops above 2864, and that'll be that. But this is important. 200 MA, 2800. Watch XLF as I showed you. If it breaks 26, I think a strong reaction lower could happen in XPX, but not before it starts really closing. I would expect 2 weak closes below 26, and then something can happen. NQ is, it's still in the range. I think 7300, 7260, unless it busts that, I'm not really all that worried. 7620, 50, I'm a seller. The RUT could be in trend, but if it doesn't break 1450, I think sideways for a good while. Told you what I think of volatility. 2022 will trade, which will enable the S&Ps to go down to 2800, but that's about it. And European equities, I still don't think that we bust this, these very important levels, 11,366. If we do, then I'm wrong. DX, well, it won't bust the 111.08 on the weekly basis. I now think probably 112, and coincides with a nice level in the 210 basis point level in the 10-year note against the bonds, and then from there on we have a chance for more dollar strength. Thank you very much indeed, and have a lovely weekend. Tweet you on Monday.